Once upon a time, investors were enthralled by a smart contract cryptocurrency platform that introduced a plethora of advantages to the crypto world. However, that seems to be in the past now, as these investors are turning their backs on cryptocurrency. So what happened? Well, to be precise, a lot actually happened. The cryptocurrency world is in chaos. And the question we ask is, why? Well, because they're being hit by the same factors impacting stocks and other assets. Just months ago, cryptocurrency companies were advertising during the Super Bowl after virtual currencies enjoyed a dazzling rally in 2021. Today, Bitcoin and other cryptos are plunging, and other companies such as Coinbase, which runs the largest crypto exchange in the US, are announcing layoffs. The crypto house is on fire, and everyone is just rushing to the exits because there is a complete loss of confidence in the space, said Ed Moya, a senior market strategist at financial firm Oanda. Everything was going well for Cardano in 2021. However, there are some issues with head-spinning predictions various analysts have rolled out for Cardano ADA. For one, Cardano would have to start experiencing some kind of positive turnaround very soon for it to even be able to hit 2023 expectations. It has been on such a devastating decline recently that sentiment is turning truly sour. If ADA isn't able to show signs of positive gains at all, then it might never go back up again. So is this the end for the greatly hyped cryptocurrency? At this point, it's okay to wonder whether positive outlooks for ADA are just pie-in-the-sky expectations. Climbing above $5 might have seemed like a no-brainer for ADA in the previous years, but currently it seems greatly far-fetched, given that the dark sides of cryptocurrency that have been exposed recently. Nothing feels safe here, plus many crypto investors are turning away from Cardano ADA, hesitant to even take a chance. There's always been a great deal of raging skepticism in the crypto world. For a second, the crypto future seems certain, and the next, everyone is confused again. Cardano ADA has lost so many grounds due to a slew of problems that have invaded the cryptocurrency sector. Everyone thought 2023 would be better, but right now we are facing the worst problems. Whether Bitcoin's value goes up or Bitcoin's value goes down, it begs the question, what exactly is the potential of crypto assets? Bitcoin is the big thing in crypto, and other altcoins trade in any direction it goes. The technology behind these assets, including blockchain and DeFi, is an exciting advancement that can help revolutionize fields beyond finance. You heard it right, beyond finance. It could, for example, propel financial inclusion by providing new, low-cost payment methods to those who lack bank accounts, and in the process empower millions in low-income countries. This has been the emphasis for such a long time. The possible benefits have even led some central banks to consider the idea of issuing central bank digital currencies, or CBDCs for short. However, there is a peril that comes with these whopping promises. 2021 was an exciting year for crypto because there were mind-blowing returns and hype about crypto. We enjoyed the promise, but right now we are caught in the middle of the torrent of perils. So we cannot blame Bitboy Crypto for predicting the failure of Cardano ADA in this tumultuous crypto season. So many cryptocurrencies have gone down the drain and have been silenced. So what are we trying to imply in today's video? The same reason crypto assets are so attractive is also what makes them super dangerous. The digital offerings are typically built in a decentralized way without the need for a central bank, thus giving crypto asset transactions an element of anonymity, much like cash transactions. The result is a potentially major new vehicle for money laundering and financing of terrorism, and we've definitely had our fair share of that. Of course, money laundering and terrorist financing are only one dimensions of the crypto's perils. Financial stability is another one. The speedy growth of crypto assets, the extreme volatility in their traded prices, and the ill-defined connections to the traditional financial world could easily create new weaknesses and limitations. So we need to develop a regulatory framework to meet an evolving challenge. It's not an appealing suggestion, but we need to face it. So much has happened already, so what's next for crypto? The volatility of crypto assets have instigated an intense debate on whether they are just bubbles, another fad, or a revolution equivalent to the advent of the internet that will interrupt the financial sector and eventually replace fiat currencies. Well, the truth is somewhere in between those two extremes. Nevertheless, it would not be wise to dismiss crypto assets or anticipate their downfall. We must welcome their potential, but also recognize their risk. Last year, general market turmoil crushed the cryptocurrency market, wiping out $2 trillion in value. And when investors worry about the economy, they usually head to safer assets and leave the riskier stuff for another day. Some just go all out and never go back again. Crypto, as a new industry, is risky because we don't know exactly what the industry will look like years down the road, even if it seems promising. Better days for crypto might be on the horizon, and that's because a bull run is on the horizon. Of course, we can't predict exactly when it will arrive, and according to history, bull markets always follow bear markets. And in the favorable condition of a bull market, crypto could soar. However, many investors do not know which crypto to trust or to pick. Even with downsized Cardano ADA still remains an interesting option. But looking beyond the odds, Cardano has something in common with Ethereum, the world's second biggest cryptocurrency. Ethereum's co-founder Charles Hoskinson also created Cardano. Ethereum is already a successful blockchain, leading the world in decentralized applications and NFTs. But Hoskinson aims to make Cardano even better. The Cardano team is working to make this young blockchain a stronger player when it comes to decentralization, scalability, and security. To accomplish this, the Cardano software engineers use peer review. This implies that they publish details about upcoming plans and seek thoughts from fellow experts before launching updates. The one big disadvantage is that this makes Cardano slower than its rivals. But the advantage is that it leads to fewer glitches and makes Cardano a blockchain that you can count on. All of this is winning over users. Cardano also recently reached a record high and total value locked of more than 365 million ADA, according to DeFi Llama. That represents the value of assets staked in the system. Back in 2021, Cardano enabled smart contract functionality. Since then, the creation of these contracts using the Cardano Plutus language has been on the rise. Over the past year, Plutus scripts have increased about 200% to more than 5,000 according to data from Cardano Fans Stake Pool. Electric Capital's annual developer report also suggests that the idea that more users are swarming to Cardano. The platform saw a 16% increase in full-time developers last year. Plus, Cardano's progress is far from over. Software engineers are working on an exciting project that can make Cardano one of the fastest and most efficient blockchains out there. Sounds amazing, right? This is all through the creation of Hydra heads, small off-chain ledgers that handle certain operations. This will avoid congestion on the main network and boost the volume of data handled and speed. There is no release date yet, but for now, we are sure that there is light at the end of the tunnel. Furthermore, the founder of crypto capital venture Dan Garbardello has highlighted data that is strengthening his bullish predictions of Cardano ADA reaching $15. Back in June of 2020, Garbardello accurately predicted Cardano's ADA all-time high of $3, when the token was valued around 9 cents. At the time, Garbardello's prediction hinged on Ethereum events, and once again he's relying on Ethereum's data to predict the future price for Cardano ADA. In a video on March 25th, Dan Garbardello observed that Ethereum reached 4 million wallets in 2017 at a market capitalization of $21 billion, while Cardano hit the 4 million wallet milestone with a $12 billion market cap. Ethereum went on to smash a $125 billion market cap during the bull market, and Cardano reached $91 billion. So Garbardello expects ADA to hit $15 in the next bull market, with its market cap rising to a whopping $500 billion. He supports the fact that developments within the Cardano ecosystem are aligned with Ethereum, though he deems the former a better blockchain. I'm not even discussing the fundamentals here. I'm not even discussing what Cardano as a blockchain is doing. When I did this video last time, Shelly wasn't even here. The staking mechanism for Cardano wasn't even here yet. The Mary hard fork was not even here yet. Multi-asset ledger, Alonzo, and smart contracts, Garbardello said. So with this, is Cardano going to be a failure? So be sure to take our time and weigh our opinions appropriately. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.